Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast, where we're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And if you've ever wanted to know how having someone on your team that has a knack for finding things like even lost earrings, how that person can be a powerful benefit for foreign investors that are interested in investing in the United States, then guess what? This is the conversation that you're going to want to listen to until the very last word, I promise, because today's guest not only is originally from Brooklyn, New York, he currently lives somewhere else, and I'm going to let him talk about that, but I'm super excited about it. He's also committed to providing the best professional services and solutions for your tax issues. He's the managing partner of the U.S. Tax Department at VBIR. He'll tell us what that's all about. And most importantly, he's the founder and the CEO of Kastner Tax Solutions. It gives me great pleasure to welcome to today's conversation, Mr. Kenneth Kastner. What's up, Kenneth? How you doing, man?
All right. I'm doing great, Billy. Super pumped like you are.
Oh, man, I'm super excited. I mean, it's great to be able to pick back up on a conversation that we started many months ago. And now you're here and you're going to be sharing all of your knowledge with so many different people. And as we talk about them here on the Going Long podcast, as you know, we really want people to feel comfortable and confident investing beyond their backyard. And that's really your sweet spot, especially those people that are living outside of the United States, as well as people that are in the United States that are interested in understanding more about U.S.-based real assets and a lot of the different tax things that are happening. And I just want to make this as an overarching statement, just for everyone that's listening to today's conversation. Kenneth and I are going to share some ideas today. He is a tax professional, but we are sharing ideas. We are not giving any kind of advice to anybody. So I think just before we even get in the conversation, just to set the stage, Kenneth, because I love talking to tax professionals. You guys are awesome. And I just want the Going Long family to understand that. So without me saying anything else, Kenneth, really quickly, we like to ask everybody here, or at least I do, the same 5 questions. Going to start with 2 in the middle, 2 in the beginning, 3 at the end, and then you and I are going to talk in the middle. So the first thing that everybody wants to know is, your question is a little bit different today, but where do you live?
I live in a city called Beit Shemesh, which is in Israel, very far away from where I grew up in Brooklyn, New York, like you mentioned. And I've been here for the last 25 years. And nevertheless, doing U.S. tax stuff, but for people living outside of the U.S.
I love that, Kenneth, and that's why so many people are going to resonate just like me. I'm originally from Columbus, Ohio, and I've been over here in Europe now for the last 20 years by choice. And so very similar thing, and also helping people to understand more about the U.S. real asset market. So awesome. So thank you for sharing that. Then the other thing is, help us understand with some positivity, right? What's the most positive thing that's happened to you in the last 24 hours?
All right, cool. Well, yesterday, my kids' school had a parents-teacher meeting day, conferences. And I was really fortunate to hear so many wonderful things about my kids from all the various teachers in the school. So that's definitely the highlight of the last 24 hours. No question about it.
Yeah, just you love being able to get that positive feedback about the kids. It also helps you just to know that, hey, look, sometimes all the things that we're doing, they're working. And so thanks for sharing that with us. It's fantastic to hear that. So thing is, Kenneth, I've given a couple of very, very high level things about your story. It would be impossible for me to do that kind of at the opening pitch and stuff like that. But I'm sure that people really want to understand, like, what's this whole earrings thing about? So if you could do us a favor, if you could actually just share your backstory in your own words, help us get a chance to get to know you more. And then if you could highlight maybe along the way, Kenneth, some of the different decisions that you've made and what has helped you to get to this point in your journey as a tax professional, please.
Okay, well, everybody always asks me, how did you get into this, right? How did you become a CPA or a tax accountant? Why are you doing this? So like you mentioned, I always had like this knack for detail and, small details that people don't have any they don't have patience for it. and I think that's something that, it's a little bit different for me. I'll look for a lost earring until I find it. I won't stop. After, people give up after 1 minute, 10 minutes, 20 minutes. Yeah, somebody sends a wedding invitation. I'll be looking for spelling mistakes. It's just automatically, that's what I do. So I guess it was kind of like a natural move to fall into this place. I finished college over 10 years ago, got my CPA actually here in Israel. And then, doing all the regular things. You're working in big accounting firms, small accounting firms, the biggest in the world, also EY. And then I got, from audits into tax and then international tax. And then I found my way to US taxes. And for the last 7 or 8 years, I've been hyper-focused on U.S. taxes, and specifically for foreign people who invest in U.S. real assets, real estate, and not just in Israel. I work with people all over the world. That's what I have the KastnerTaxSolutions.com website is to be able to help people wherever they are in the world. So yeah. I work with people in Australia and in China, not yet actually people in Spain. I did not yet have any clients from Spanish people, but I'm open to that as well.
Of course you are. We'll work on that. Don't worry. Thanks for highlighting that.
For sure. Yeah. And about a year ago or half a year ago, I joined VBIR. Previously, I was managing the tax department in GTS, which I helped build over the course of 5, 6, 7 years, and then they were bought out by a bigger company. And at that point, I moved out to VBIR. Now I'm directing the tax over there. So I definitely help, a lot of the locals, the Israelis, but not only.
All right, man. So this sounds fantastic. So you kind of had this knack for detail. You were figuring things out. You liked, one of the words that comes to mind is persistence. So when you just continue to look for those earrings and you find them, and when people give up, which is, especially when you talk about a lot of detail and really being able to understand that as it relates to your numbers and the amount of money that not only you are making, but you are more importantly keeping, which is one of the things that we love to be able to talk about here on the Going Long podcast. And so, just to set the scene as well, Kenneth, I think it's really important because you and I, when we talk about foreigners, I think that you and I know what we mean. But can you clearly define when you say that you're working with foreigners, what that means in your context? Because I think that's going to help us to set the to kind of set the table.
Sure. When I talk about foreigners, I'm referring to anybody who lives outside of the United States. Okay. Usually it's also going to be somebody who's not a U.S. citizen. Okay. That's kind of like a different category. U.S. citizens, expats that moved away from the U.S., but they're still citizens and have to file in the U.S., the worldwide income, no matter where they are. But I'm talking about people who are not citizens of the U.S., totally random people from anywhere in the world that decided for whatever reason they want to invest in the US in real estate. And because of that investment, they have US tax filing obligations, usually. Sometimes not, but usually they do. And that's where I come in to help make sure that they're in compliance, make sure that they're not paying double taxation because I guess we'll talk about double taxation. It's a big issue. I mean, maybe we'll start with that. We have,
yeah, even before we go there. So, and that's definitely one of the things that we're going to talk about because it's huge. And I just want to make sure that we are crystal clear. So, because there's, especially for those of us that are living outside of the United States, I mean, you and I, we both talked about, and there are things that you can do with citizenship and change it and all that kind of stuff. But just as a basic premise is, if you have the U.S. passport, you are a citizen, typically, right?
Yes.
Typically, I'm just simplifying it.
Yes.
And then if you are actually residing in the United States, you are a resident citizen. And so if you are someone who is a citizen but living outside of the United States, you can be a citizen who is residing abroad. What you're talking about, and when we talk about foreigners, it is someone who is not a U.S. citizen and someone who is not currently residing in the United States. Is that correct?
That is correct.
Perfect.
Just one term that you mentioned: people who are not citizens but living in the U.S. They're not considered citizens. They're considered residents, or resident aliens. In the proper term, they're not necessarily citizens. That's just
Yep. No, love it.
technical legal.
Yeah.
Terms,
Love it. That's exactly what you're doing here. You're helping to educate us, and that's what we're here. We want people to feel comfortable and confident, and we're educating them so that they want to be able to do things beyond their backyard. So great. So we have that kind of as a base level foundation. So we have the different. What we're talking about is someone who is a foreigner, and so in this context, like you yourself went down a certain path. Like you mentioned before, you started in audit, and then you went to tax, and you went to international tax, and then you went to U.S. tax, and then you were really focused on working with foreigners that are interested in U.S. investing. So maybe you could also help us now and just help us understand, like, when you went down this path, there was obviously a reason, because you were looking to help people, help to serve people in a certain way, shape, or form. But what was it about your initial training and then what you started seeing that really made you want to serve this particular individual who is someone who's foreign, who's interested in the U.S. market?
Well, we found at around that time when I was, in EY, and around that time there were two senior managers at EY that decided to open up their own firm. That's what I mentioned before, GTS, a small firm that eventually grew and was sold out. And they wanted to bring me in to that, that new, startup. And coming from, the biggest firm in the world to the smallest firm in the world, I had to be really convinced. So they were able to convince me. So I think the main thing was they saw that there was a lot of demand for, at the time it was Israelis who were investing in the U.S. and they didn't have a proper solution, especially because of the language. Also, they were working with accountants that were in the U.S. and everything was in English, and they wanted somebody local, not just because of the language, but also the time zone, also the proximity, and there weren't enough people at the time that were focused on that. So that was really a niche and a need that we saw for the Israelis at the time, people who wanted to invest in the U.S. but they didn't have the English, and they wanted somebody local who could speak their language in every possible way.
Yeah, and so this is one of the things that we talk about a lot here, and this is once again, as you're going out as an entrepreneur and a business owner, you're really looking for where are the needs in a specific marketplace, and you want to be able to serve those individuals that are looking to solve a problem. And so we always talk about what's your personal philosophy in terms of where you want to invest and why you want to invest and what are the benefits that you're looking to receive. And then at the same time, you need to go to a certain location where you can find those benefits. And then once you get to that location, it's about building the team. And there are certain things about the team that they want to be able to understand, either a location or a specific dynamic or a specific area like tax. Because when you have that person on your team that is actually speaking your language, that understands what you want, and it can help you to get the benefit that you are looking for, well, this is just another example, right? And so this is where you are actually helping to fit into the overall philosophy, because then when they want to purchase a multifamily building through a syndication, or if they want to just purchase single family residences, or they want to buy a business, or they want to do whatever it is, you're there to help them with those specific opportunities. So it's just, I wanted to frame that so that our entire Going Long family understands it's the exact same thing. And as the team member, this is where you're playing a critical role, and especially as it relates to the tax part. So let's continue that journey then, Kenneth, as it relates to the tax. And now you've gone down your path and you've understood that this is an area that a market need. And so you're looking to serve that need. And so what is it that you're finding that your foreign investors are really looking for in terms of the U.S. market? Like, why are they looking at the U.S. market versus wherever they live? You mentioned China, you mentioned Australia, you mentioned Israel.
That's really a good question. I'm not sure if I'm really equipped to even answer that question, because they come to me after they already invested. I don't pretend to be an investment advisor, or to direct them where to invest necessarily. I help them with the tax side. I don't know if I'm embarrassed to say that I don't have any personal investments myself in real estate. That's probably the downfall of the fact that I'm so detail oriented, that I'm in this industry for such a long time, and I'm just waiting to learn more and more in order to be confident enough that I know where where I want to invest and what I want to do. So my advantages are also sometimes disadvantages.
Actually, let's pick up on that, because I think this is really interesting. Because in that knowing, working with tax professionals, tax strategists, and then understanding the different layers within tax, like one of the things that you mentioned, so you have those individuals that are coming to you, and they're coming to you after the fact. That's probably how you're meeting most of them. But just in terms of being able to best serve someone from a tax strategy perspective, I'm assuming, and confirm this for me, please, in the Go Along family, that your preference is that you meet someone before they make the purchase versus after making the purchase.
Oh, for sure. Okay. For sure. That's one of the things we're trying to bring awareness to. In everything I do, and when I'm on podcasts or posting on LinkedIn, to encourage people to come and speak to me before they invest and not after the fact, because many times they come and they realize they would have done things differently had they spoken to a tax advisor before, and it just wasn't for some reason on their radar. It's just okay, I have some money here. They see an advertisement, somebody doing a syndication or whatever, and they say okay, whatever. So I think that's also one of the reasons why I didn't invest yet, because there are so many good people out there that offer investments, but I don't know. They're also, I've seen a lot of scams and a lot of negative things also. So it's really important to be careful who you trust and who you put your money with, and definitely from the tax side, whoever's listening to this, definitely think about the taxes before you invest, because it's not just the taxes, but also about the tax structure. If you want to invest as an individual or to open up some sort of an entity to invest with, that's something that's difficult to do after the fact.
Perfect. So, and appreciate you doing that. And so one of the reasons for asking that question is, number one, just to be very clear, it's best to engage a tax strategist before making your purchase, because then you can actually look at the different scenarios. What are some of the different exit plans that you can have? What are some of the different impacts they're going to have on you or your entity or whatever the case may be? And at the same time, so many people do it after the fact. So one of the things that Kenneth, you and I are talking about is that we want to be able to help people in advance so that they can have the best tax optimized strategies when they're looking to purchase any type of an asset. Which brings me back to another thing. So, because I want to kind of smash some of these, and once again, everybody, we're not giving any advice here. We're just sharing stories, sharing ideas. But one of the things that I used to hear all the time, and I still hear it, and I'm sure you hear it all the time, is, hey, look, man, I'm a foreigner. I'm not a U.S. citizen. I'm not a U.S. resident. I'm not a resident alien. None of these things. So I've always been told that I can't invest in the U.S. because it's impossible. Is that correct? Is that accurate?
No, of course not. And obviously, you know the answer to that, and we wouldn't be here if that was the answer.
Right. So what are some of the different ways that someone who is a foreigner could think about potentially investing in U.S. in real estate or real assets?
Okay. Well, there are definitely a lot of different ways that I've seen, and just connecting that to the previous topic, I think that that even though it's important, obviously, to think about the taxes before you invest, I think it's not a problem to go around and looking around to different people who you want to invest with and different types of things, even before you speak to the tax person. But before you sign the dotted line, or before you get close to making that actual investment, then at that point, come to the tax guy with with all these different options that you have, and discuss what the implications are. Because coming to me before you even know what's out there, and you haven't spoken yet to the investment advisors, There's just, so much I can tell you in terms of, general education about how the tax system works. But if you have something that's a little more specific, then it could be a lot more efficient. So getting back to your specific question, there are a lot of people that don't want to travel to the U.S. Essentially, most of them go into partnerships and syndications, big groups of foreign people who together invest in the U.S. through an LLC that is operated by someone in the U.S. and there's a foreign representative that that gathers the groups of the investors, and that's probably the most common way that most of the foreigners that I've seen invest, and that kind of structure is relatively simplistic. Okay, they get into partnerships, so they'll get something called a K1. Based on that K1, we prepare a tax return, and then that's pretty much it. But if somebody wants to be a little more involved and go out there with a few friends or not going into the partnership, but they want to have a house on their name, say I own a house in the US, and collect rental income and go through that whole headache. Sometimes it's a headache and sometimes it's not, but the different implications, different things you got to know. But that's definitely another option. I'm sure you'd want to know if you can invest without having a U.S. bank account, and the answer is also yes. You don't have to have a U.S. bank account in order to invest. You could send the money straight from your foreign account. Sometimes there are instances where it's easier or better to have a U.S. bank account, and then in those situations, there are ways to obtain U.S. bank accounts. Usually, you have to go in physically to the U.S., but even if you're not physically in the U.S., there are sometimes ways around that, especially if you're not doing it as an individual. If you're doing it as as an entity, and you sign off papers to somebody that you trust in the U.S., and they could be a representative, and open up a bank account on behalf of your entity. But like I said, it's not always necessary.
Yeah. So let's stop there just for a second, because I want to make sure that people are following, because sometimes we people can hear and they go, okay, well, no, it's not even necessarily going too fast, but just so that people will just take a break here. So basically, like you talked about before, so let's say there's probably 10 or 15, 20 people that live in the same country, whatever country you want it to be. And we put all of our money together, and then we're going to invest with someone who is, in the first scenario, was that person actually living in the United States that is a representative of us, of the group of 20 people, or was that person one of the 20 people that was living outside of the United States as a foreigner?
It's interesting. The people that formed the LLC, the partnership, in an LLC, you don't have to have a general partner. Everybody can be a limited partner, and everybody can be a foreign partner also. So all of the partners of this LLC could be foreign people and, limited partners, and the operators or the partners in the US could either be also a partner in that LLC, or they can be an outside manager managing the LLC and acquiring assets and doing whatever for the LLC. So definitely it can go in many different ways.
Okay, perfect. And that helps us to also to understand something. And like I said, once again, I'm going to repeat it again, because we're talking about ideas, and we're talking, some of the things that Kenneth's talking about now are really more legal structures. And although we're talking about legal structures, his focus is really on the tax implication of having these types of legal structures, right? So just so that also is very clear in everybody's mind. So there are a couple of things. So we've smashed the myth. So you can be a non-U.S. Citizen, a non-U.S. resident, and still invest in the United States. Everybody's situation is different, and this is why it's important to speak to a tax professional, speak to a legal professional, so that actually someone like Kenneth can sit down with you and really help you with your specific plan. So I think that's the first thing. But then there are a couple of other things for those of us that are living outside of the United States. Many people who are foreigners. There are some other myths that I would like for you just to either Well, we'll just talk about some of the things. So one of the things that you mentioned in the very beginning is that you are going to, we'll keep going down this path. So you're investing in something. You're not a U.S. citizen. You're not a U.S. resident. And there's this thing that's called withholding tax. Like, what is withholding all about? And why is that something that is potentially important for someone who is thinking about investing in the U.S. as a foreigner? And how that could, what is withholding, and how would that potentially affect their returns?
The way it affects it is essentially cash flow. That's what it is. Because the way it works is anybody who is not a U.S. citizen, the IRS doesn't want to chase people all over the world for their taxes. Okay, so anybody who lives in the U.S., they have to file a tax return in any case every year, and they're on the radar, and there are other ways to reach them and to catch them and to do all that kind of stuff. But people who don't step foot in the U.S. and they have investments and they have income from U.S. source, the IRS wants to make sure that they're going to get their tax. So therefore, there's this concept called withholding, in which the U.S. person who's transferring funds to a non-U.S. person is required to set aside a certain percentage of taxes and send that to the IRS on behalf of the foreign person. Okay, and sometimes that amount of tax by law is more than what the foreign person will have to really pay in the U.S. And the only way to get back the difference is to file a tax return at the end of the year. So this way, the IRS makes sure that they get their tax because they're taking even more than what they need temporarily, and once a year, the individual, the investor, the foreign person, will file a tax return and get back from the IRS any extra taxes that they were withheld from them.
So let's just say, and I love that example. So thanks a lot. So because withholding is something that is the obligation of the person or the operator or the syndicator that is based in the United States, that it's an obligation, right? And so basically saying that if you have and I'm just making up numbers, everybody, don't worry, we're just making up numbers. It's just to give the idea what Kenneth is talking about, just so you understand. So let's say you invest in a syndication, that syndication, or you have a property and that property returns, 3%. Right. And so that 3% is what you are going to return on the property. At the same time, you may have a withholding, meaning the person in the United States on that particular asset has to withhold 20%. And so I'm using extreme examples here, right? So they have to withhold 20%, but you're supposed to make 3%. And so the idea is that the IRS says, okay, as long as you go to if you do your filing, you may actually find that you had because of depreciation or something like that, it was a negative return, and you will be able to keep the 3%. But the whole point is you have to go through the exercise of declaring your taxes in the United States. Would that be accurate, or what would you change in that example?
That is very good. The only thing I would change is the point that you mentioned about depreciation, is that the depreciation happens on the partnership level, not on the individual level. So the depreciation could actually lower the taxable income, and there won't be withholding, because the withholding is calculated on the profits after depreciation. So that specific example wasn't 100% accurate, but the idea is true. That we're talking about, like rental income, on a regular basis. But what your example is more relevant for is withholding when it comes to FIRPTA. And I don't know if you heard that.
So let's stop there, because this 10 to 15% that affects many people that are, depending on if you're $1 million or over. I don't want to get too far ahead of myself, but since you talked about it, it's something that I see all the time. It's something we talk about all the time. But for those people that are not familiar with FIRPTA, can you tell us what it is and how that can impact someone as well?
Absolutely. So FIRPTA is a law from 1980, I think.
Yep.
And it basically says that when a foreign person is selling their real estate, okay, when they're selling the real estate, then the U.S., or not even the U.S., the buyer has to withhold from that foreign person from that foreign seller, usually 15%. Let's just keep it simple: 15% of, not of the profits, but of the sales price. Okay, the sales price. So that's going to be a lot more tax than the profits. If you take a simple example, if you're selling, if you bought a property for $80,000 and you're selling it now for $100,000, you have a profit of only $20,000, but you have to withhold the buyer has to withhold 15% of $100,000, meaning $15,000 out of $20,000 profit. That's a lot more than what he's really supposed to pay. So there's going to be a lot of taxes he's going to have to get back.
Why does FIRPTA exist? Why does FIRPTA exist?
Oh, it's the same reason as the withholding in general. The IRS doesn't want to chase people all over the world, so they have a handle on the U.S. person, or the person who is buying the U.S. real estate, and they say, okay, I want you to make sure that don't give them the entire $100,000 now. Okay, just give them $85,000. Give me $15,000. Okay, because I want to make sure I the IRS want to make sure that I get my due taxes, and if it's too much, then they'll come back later and they'll file a tax return and they'll get it back.
Awesome. So once again, it's about being able to go about having the obligation to go through the tax declaration, right? And then afterwards, there is the well, depending on how the numbers work out, you could get that money back, or you could get some of that money back, or you may have to pay a little bit. But the whole point is, and you won't really know until you go through the declaration process, which is why the IRS, the Internal Revenue Service, doesn't want to chase people all over the globe, which was fantastic. There's one other thing that you mentioned before, Kenneth. I appreciate you helping to educate us once again, because you're helping us to feel much more comfortable and confident, and so we can invest beyond our backyard, especially for those people outside the United States that want to invest in the United States as foreigners. Another thing that people talk about all the time is, well, man, you know what? But I live in country X, and in the United States, they're going to tax me, and then they're going to tax me for what I make in my own country. So there's this whole thing of double taxation. Like, I don't want to pay taxes twice. Like, what is that all about? So if for someone who's never heard of double taxation and some of the different treaties that exist, what does double taxation mean? And then also, can you kind of help some people feel a little bit good, because there are some treaties that help to actually treat this exact thing?
Yeah, absolutely. And even without a treaty, when it comes to real estate, it's usually okay. So just taking a step back, the way it works in most countries tax their residents on their worldwide income. Okay, so if you're living in Israel, okay, and you have income in the U.S., then Israel will also want to tax you on that U.S. income, because you're a resident of Israel and you have to report your worldwide income. Okay. On the other hand, you have income from a U.S. source. It's in real estate is in the U.S. So even though you're not a U.S. resident, since the property is in the U.S., so the U.S. also wants tax. So in theory, you have a situation where you have two different countries that claim that they want tax on the same income. So in theory, there could be double taxation, meaning you'll pay whatever 10% in one country and another 10% in the other country, and you'll end up paying 20% instead of just 10% once. The good news is that there are tax treaties, and like I said, even sometimes without tax treaties, there are internal laws that allow for foreign tax credits. Okay, which means that if you pay tax in one country, then you can get credit in the other country for the tax that you paid, and you won't pay double tax. You'll just pay the higher amount. For example, if in Israel the tax rate is 12% and in the US it's 10%, just examples, not real numbers. Okay, so if you pay 10% in the US, you won't pay another 12% in Israel. You just pay another 2% to get to the 12% that's in Israel. And what the treaty does essentially is it tells you who has the first right of taxation, which country gets the money first. Okay, because you can say, okay, if I pay 12% in Israel, then the U.S. won't get anything, right? But that's not fair to the U.S. because especially here we're talking about real estate, and when it comes to real estate, it's attached to the land so when it's on U.S. soil or wherever the real estate is physically, that's the country that's the first right of taxation when it comes to real estate. Every different type of income has different status. So for real estate, the U.S. will get the first right of taxation. If there's anything left over, then the foreign country will get that, but it won't be double taxation. Generally,
wow.
There are ways.
Generally,
yeah, there are other ways to get stuck with double taxation, and that's when there are different ways to calculate different kinds of tax methods, such as depreciation and 1031 exchanges. If there's certain tax deferral methods or certain tax calculation methods in the U.S. That the foreign country does not honor, so when they calculate the tax in the foreign country, they won't get that tax benefit, and they'll end up paying more altogether. So I think that's a little more, probably have to break that down a little, but there are scenarios where if you're not careful, you definitely could get stuck with double taxation. That's why it's important to speak to a professional to make sure you don't get to those situations.
Yeah, that's exactly what I was going to say. So because I know, as we mentioned in the beginning, like, we're sharing ideas because what we want you to be able to do, and Kenneth, you're helping us a lot by especially talking to us about some of the different terminologies that I'm super familiar with because I hear about it all the time, and you're very familiar with. This is very helpful for so many people who either are foreigners or are interested in it, and they're just now starting to find out more about different ways they can do it. But the real important thing is being able to reach out to a professional and talk about your specific situation. And so when you have a professional like Kenneth, who is working with people from literally all over the world that have the same interest that you do, which is in US-based real assets, then it's a great way for you to pick up the phone, go to his website, and be able to reach out to him and say, look, Kenneth, I've got this specific situation. I live in country X. I'm interested in the United States investing, and I want to do this, this, and this. And you're doing that in advance, not after the fact, which means that Kenneth can actually sit down and help you devise a strategy that is going to be much more tax efficient. So, before we get into the Going Long Final Three, Kenneth, just on that, like, talk to us about who is the person that you're typically helping today, and just so you can give the Going Long family a better idea of who those people are that they're like, hey, listen, I've really enjoyed this conversation. This has been really cool, but I don't know if he really works with people like me. Who is the person that you're working with today?
Oh, that's definitely working with you. The answer is yes. No. There are definitely two categories here. There are the U.S. people, the U.S. operators that need help with the with their foreign investors. Okay, and in terms of calculating the withholding and understanding what their obligations are, and to make sure to do it right. And obviously, they're the foreign investors and the foreign syndicators, or whatever you want to call them, the operators that deal with the foreign investors, individuals. Okay, we're talking about individuals or businesses. There are also sometimes businesses, companies that also take their corporate earnings and invest it directly in the U.S. It doesn't have to be an individual, but anybody that's starting out or already involved in U.S. real estate after the fact. It's never too late to get into compliance.
There you go. No, that's perfect. So that helps us to understand. So really, those that are operators helping those individuals that are foreigners investing in the United States, and then those foreigners that are outside of the United States wanting to get involved, and they'll probably start talking about things like Regulation S when they're doing different types of pooling of funds and things like that. And Kenneth can help you understand like what are some of those implications. Reg S stuff is really SEC, so we're not going to get into that, but it's more of the tax implications of those kinds of things. So thanks for helping us get clear on that, Kenneth, and I'm sure you're helping a lot of other people, but we got to get into the Going Long Final Three. And the thing is, I never ask anybody the Going Long Final Three unless you tell me that you're ready for me to ask you. So Kenneth, are you ready?
I guess I have to say yes. I don't know. I'm afraid to say no.
Yes, exactly.
Yes, I'm ready.
Yes. All right, here we go. Here we go. Fantastic. So listen, so we started, we started actually on this side of the pond, and we're going to stay on this side of the pond today because we'd love to know what your favorite European city is, either that you visited or still on your bucket list to visit.
Okay, it's interesting because I'm not a big traveler, so I don't have that many places that I can choose from.
Everybody's got a bucket list, man.
No, not bucket list. I want to choose a place that I saw that I was actually there. I was in a place in the UK in England called Newcastle upon Tyne. I was there for a few days. My wife had a course there. I was there for a weekend, and it was a really nice little community over there, and a cool thing. So. That was, I'll say Newcastle.
Newcastle. Okay, right on. So we got to vote for Newcastle. I think that's the first one. Awesome. Newcastle's on the map. So right. Fantastic. Appreciate that. Then listen, the second thing is I want to go into, like, one of the things I noticed about really successful people, Kenneth, is that all successful people have something that's very similar, and that every single successful person has only made one mistake. And that's the real reason that they're okay, I get this wrong all the time. And so I guess I just get ahead of myself. But okay, all joking aside. So the thing is, all successful people, like everybody makes mistakes. We all make mistakes all the time, or learning opportunities, or however you want to say it. But the difference is those people that are successful really take away the lessons from these mistakes, learning opportunities or whatever. So what is the one lesson that you've made, like maybe you made that mistake or you had that learning opportunity, but that one lesson that you want to share with the Going Long family today that's really going to help them avoid making the exact same mistake and really help them get on the fast track faster?
Okay, well, whenever I think about a mistake, I go back many years to when I was like 11 or 12 years old. It just still rings in my head. And I think the main lesson in one word is don't be selfish. Okay, I don't think we have time to tell the whole story, but there was a time I was in Little League, and I thought about myself instead of the team, and I regretted it immediately. And that's something that sticks with me. You can't just think about yourself. We don't live in a bubble. We live in a world with other people. So if you're not selfish, you think about other people, then that's the way you're also going to be able to grow yourself and thrive.
Love it, man. Don't be selfish. And yeah, we'll have to pick up on that Little League story at a different time. But appreciate you sharing that. And then lastly, man, we always want to fill everyone's brain or give them the option to fill their brain with knowledge. So what is the one book that you would recommend to the Going Long family?
I think it's the book that I'm going to write. Oh. I'm going to write a book. I'm telling you, I keep telling myself I want to write a book about funny experiences with clients, but who knows? Maybe it'll happen. I'm actually not a big book person. If I have trouble falling asleep, I'll read a book. It works like a charm. But I read a lot. I do read a lot, just not books. I read plenty of articles online, research tax laws when I need to. So my own real recommendation, if you want to, put this down, I don't know if anybody else chose this book before, is the Bible.
The Bible.
It's the bestseller, and it's full of life lessons. You don't need any other book.
It's amazing how many people have selected the Bible, and so we're going to add that into your show notes again. We get that frequently, actually.
Oh, so, you do? Okay. Yeah, we do. Well, you see, it's a bestseller. I told you.
It is a best. It's definitely a bestseller. It's definitely a bestseller. So listen, man. So I'm just thinking from our conversation, right? I'm thinking about how much you've known that you love detail, and we kind of joked a little bit about you being able to find earrings and that patience and that persistence, and then you went down the audit trail, and then you went from the audit, and then you started getting into tax, and then international tax, and I know we talked about it before, and then that really U.S. based tax, and then you made a life decision. You left Brooklyn, you went to Israel, and you've continued to really focus on helping others that have a need in the marketplace, which was really to know more about U.S.-based real assets, right, or real estate. And so as you continue to go out and continue to educate and help people understand things like withholding and double taxation and FERPTA and all these kinds of things, like I'm sure that there are so many people that are thinking to themselves, okay, and he even works with customers or clients like me. They're thinking, Kenneth, how do I get in touch with you, man? Tell me how I find out more about you. So what's the best way for the Going Long family to find out more about you, Kenneth, what you do and what you're doing at Kastner Tax Solutions?
The best way is to find me on LinkedIn. Just search my name. I like to be active on LinkedIn, but even if not, there's You'll be able to find me and DM me over there. You can email me directly, KennethDKastner@gmail.com. You can also go onto my website, KastnerTaxSolutions.com. And those are the three best ways to find me and to contact me directly. And I'm happy to help anybody who wants to ask me any questions.
All right, fantastic. And yes, you are on fire over at LinkedIn. And one of the things I would ask the Going Long family as you reach out to Kenneth, when you do that, right? Because I'm recommending that all of you reach out to Kenneth and just explode his inbox. That you definitely let him know that you were listening to him here on the Going Long podcast, because that's going to help Kenneth just to make sure that he can know, okay, well, you guys were hanging out with Billy and and so he knows the conversation, and that's going to help you also too to make a better connection with him. So definitely pick him up on his recommendation, and that's Kenneth and I are on touch via LinkedIn as well, and that's one of the reasons that he is here today. So do that. And Kenneth, listen, man, I just want to say thank you very much for investing your time with me and the entire Going Long family today. Thank you so much.
Oh, it's my pleasure. We got to do this again.
Yeah, sounds great, man. Sounds great. And listen, Kenneth, if you give me just a couple seconds, I just want to say last words to the Going Long family.
Sure.
Listen, Going Long family, thank you so much for investing your time with Kenneth and I today. And listen, he left so much knowledge, very tactical knowledge that you can put into your overall strategy. He's made himself available. And the thing is this was a unique opportunity for you to really go out and make a positive impact on someone else's life. Someone needs to hear today's conversation. So just take your iPhone or take whatever phone you have and just share today's episode with 2 or 3 other people that you know that Kenneth, what he's talked about today, can really help them. That way you can be the person of influence who's also helping other people, and definitely will help to attract other people to the Going Long family. And that's one of the things we wanted to continue to do, is build and grow our community and our family with other like-minded people. At the same time, I am going to ask you, if you have your phone or whatever, leave us an honest review. Like, I ask for an honest review because this is something that really also helps us. What did you like about today's message? What would you like to hear more about? Because that's stuff we can share with Kenneth as well. And for me, I go through every single one of the reviews, and I want to continue to make this podcast and video cast even better for you. So definitely take just a couple seconds, literally honest review. Really, really, really appreciate that. And then lastly, I'm really looking forward to welcoming you back on the very next conversation. So until then, go out and make it a great day. And thank you very much. Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.